All right. Welcome back to another episode of the Tim and Tim Show. Every Tuesday at 10 a.m. Eastern Time. We've now been doing this show for 3.5 years.
Really? Wow.
Yeah. I think 2026 is 3.5 years of doing this show. And man, we have covered a lot of topics. And let me tell you, one of the most popular requests that we get or that I get in direct messages of listeners and people that I'm associated with is they want to know what we're hearing. And I thought maybe this would be a great episode to start out this year with our sellers finally cracking. Uh, and I wanted to talk about what we're actually seeing in our day to day life of conversations with brokers, conversations with other owners and operators, and people that are potentially sellers, right? And what has the sentiment been? I mean, if you're not going to watch to the end of the show, I mean, no secret here that there's a lot of fatigue in the market. There has been a lot of wait and see. There's been a lot of, well, the rates are going to drop and things are going to get better. And we've seen that, but where do we go from here? So, hey, Dennis, happy New Year, happy New Year, buddy. Oh, that button, there it goes. Now it brings him up automatically. All right. So the culmination of 2025, a lot of conversations with brokers. And basically from the beginning of November through the end of December, there were so many conversations. There were multiple brokers were saying how they've got a ton of listings, but none of them are going to go live until January, February, March of next year. And I thought that was quite peculiar. And the number one reason, and I'm not saying I agree with this reason, but I'll tell you what I've heard is that the number one reason is they want to let the rates drop and see what's going to happen with the Fed funding rates, right? The last meeting I think was December 18th or so, 16, 18, something like that. They dropped another quarter. And I just checked the CME Fed Watch tool for the next meeting that is coming up. And there's like a 90% probability that there was going to be no Fed change in the Fed fund rates.
Mm-hmm.
What I would ask you is, what have you felt, if anything, changes in the debt markets? And me personally, being in commercial real estate, as I know most people are that listen to this show, is there hasn't really been much change, right? The Treasury, the 5-year and the 10-year Treasuries have been flat, maybe even a little up over the last like 4 to 6 months. Like nothing's really changed. There really hasn't been significant development in, positive development in interest fund rates since last summer. I think, am I correct in saying that, Tim? I think that's kind of
Yeah.
when we like June, July, August is when we started to see
Yeah.
some of the treasury bonds like really start to drop down and notice the difference in rates. Um, and I think what ultimately is happening now is that a lot of sellers have been in this wait and see mode for a long time, and nothing really significantly changed. I think a lot of people were waiting for like this black swan event, like COVID happened again, and miraculously, commercial real estate values were just going to, overnight start to double and triple, and that's just not going to happen. So I think the what do they say? The old mantra of just kick the can down the road a little bit. Well, we've reached the end of that road, and the can no longer be kicked. And I personally know of a bunch of brokers that have a lot of deals that are going to start hitting the market in the next 60 days. And I think that it's going to have the opposite effect of what everyone's thinking is when the market starts to get flooded with opportunities for sale, the pricing goes down, right? Supply and demand, you increase your supply, and if the demand doesn't increase, then you're going to have an oversupply of properties for sale, and people are just going to start making offers at whatever they feel like, right? It absolutely is a buyer's market. I think for the next 2 years, it will be a buyer's market. I don't think that the equilibrium between buyers and sellers is going to really start to change until, I've been saying this all along, 2028 into 2029.
Yep. I mean, I don't have anything different to say about that. I mean, other than, I think you brought up one thing. People keep talking about black swan events, and maybe there's one by our own doing that's coming up. But guys, I mean, you got to remember, like black swan events are called that for a reason, right? They don't happen often. Um,
Yeah.
and if you consider COVID one, which it was, That was 4 years ago now, essentially. Um, the one before that that I can think of was 2008 and 9. So
Yeah.
12, what is that? 12 years, 13 years before that.
Your cycle,
So
right?
yeah, so to think that we're probably going to have another black swan event in the next, I mean, within 4 years, I mean, I think it's unlikely, right? So
God, can't believe
you,
COVID was 6 years ago now.
yeah, so
Shit.
you got guys, you got to kind of sit there and say, hey, guys, maybe something 4 or 5 years from now, maybe, but it could be 15 years, but it's probably not likely to be every 3 years. I mean, that's not
Right.
how black swans work. So, I really do agree with Vitality here. I think we're going to see a very stable, very flat market for a while. But I think that's also a key, right? Like flat. Because
Flat.
yeah, because I keep seeing these reports and they have these headlines that get you to click on it, right? I mean, it's those attention grabbing headlines, and then you read it, and it's like, oh, and what I'm talking about is like, you know, what is it, like crazy things for the real estate market in 2026, or this is what's going to happen in 2026. Be aware, and they're like, we're going to see prices 0 to 1.5% appreciation.
Mhm.
you know, and you open it thinking, oh shit, we're going to see a 5%, 10%, 12% drop. No, it's 0 to 1.5% increase, right? And I don't really disagree with that. I do think you got some sellers out there, and Tim and I have seen this quite a bit. I think you got some sellers out there right now that are trying to realize like 15, 20, 25% gains in like a 2 year span of owning a property, or they've owned it for a little while and they're trying to, you know, what's going for 100 a door right now, they're trying to get 120 a door. And it's like, hey guys, not this market. That ain't the market we're in. Um, so a lot of times I think that's what we're seeing. And Tim, you may disagree with me here, but I think that's what we're seeing. Like with the seller expectations that we tend to see are the guys that are still trying to push like huge returns on something that they bought at a reasonable price, not a great discount, but at a reasonable price, and they're still trying to push huge returns.
Mhm.
And guys, there are guys out there that are making significant returns right now, but those guys are few and far between. Tim and I know a couple of them, ourselves, and I mean, those are the guys that have access to like incredible discounts just because of the volume and the cash that they're able to bring to the table.
Mhm.
But if you're not buying at a 40% discount, you're not going to see huge returns over the next couple of years. Uh,
Yeah.
you know, yeah, I mean, essentially, I just agree with you. Everything you basically said there.
Yeah. And I mean, we talked about it. That's why our expectations are changing of what deals are going to return to investors. Gone are the days of the high teens IRR, right? Like, the number one metric that people are going to be talking about for the next 5 years is actual cash flow distributions. I know that that has always been important and people invest for cash flow for a long time. But over the last 6 year, 5, 6 years, it was all about equity gains, right? Because you throw money in and then you get a large equity pop at the end. And now that the market's mostly stabilized and there's 0, 1, 2% increases year over year, you really have to pay focus and attention on your operations, your expenses, your cash flow.
Yeah,
Managing for cash flow is far more important than pushing for value at this point in time, right?
yeah,
Um, and what does that really mean? So obviously that's what you should I think what you should be expecting and trying to coach your investors on, how the return expectations are going to change. But what does it mean for you as an owner operator, right? As a syndicator, as a sponsor, as somebody who makes money by providing investment opportunities for people in real estate, right? That's what we do is we provide
right.
investment opportunities. And I think that it's going to create a period of time for the next 24 months that if you're in this space and you're actively making offers, that if you know how to creatively structure deals and offer seller financing terms and any kind of term flexibility, any type of a creative seller flexibility, right? Your cost of capital has got to be the number one metric that you're watching for, right? Because if your cost of capital is less than what your distributions need to be, you'll be making money, right? And I think there's going to be 24 to 36 months of being able to help people out and get them out of a difficult spot but you have to be able to think outside of the box and make it a win-win solution. And I feel like that has gone for a long time, right? Because from 2018, 19 until 2024, it was I'm just going to list it on the market and I'm going to sell it. I'm going to make a lot of money, right? Now that their transactional volume is down and people have debt that's expiring on 5-year terms, they need to get out of a deal or they need to refinance. And with what we were saying about originally is the fatigue. There's so much fatigue in the market because
Yeah.
operating real estate isn't as easy and as passive as people made it out to be, right? I mean, I know that firsthand. I mean, geez, we work all the time operating these deals, and it's a blessing and a curse, but it's far more active. It is very much an active business, not just a passive investment. And I'd actually, honestly, I'd almost tell you that investing as an LP today is a bit more active than passive than it used to be, right? I mean, think about the level of analysis that you're trying to do on your tax returns, the level of analysis that you're doing on your annual and quarterly financials, the level of analysis that you're doing by going through any of the financial reports that you have access to, which if you're an LP, you should have access to all of your financials. It's not just, hey, even if this thing's not operating that well, we're just going to sell it and make money because that's the way the market's going. It's that
Yep.
there needs to be some onsite there needs to be some oversight even from the LP side because remember at the end of the day it's you're invested into that deal, you're a partner in that deal, but you also have a vested interest so that the deal performs well. And to just forget about it is not a good idea. Now, obviously in a syndication structure you don't have voting rights, but you still have access to the people that you invested money through.
Right.
And it's important. I hear from my investors all the time of what's the business plan? How's this going? How's that going? I know that we've had trouble with some of these deals. I I appreciate when investors are engaged, right? Where it's not just you haven't paid me any distributions. What the hell's going on? It's like, well, we send out quarterly updates.
Yep.
We are transparent. We talk about what's going on. And it's important that you're involved in the investment itself because it is not just a set it and forget it. It's not like a stock account where, hey, you just, hey, market's up, market's down. It is what it is, right? There's a level of involvement and activity there. It's a proper business that people are running and it needs proper oversight. And when people are engaged in asking questions, that just lets you know that people are paying attention.
Yeah.
And that's important, right? Because value constructive criticism is important because you might somebody might see something that you don't see. What's that saying? It's you can't see the trees from the forest.
Can't see the forest for the trees.
Can't see the forest from the trees. Right. Right. I mean, sometimes it's like that because you're in it every single day. And some of those investors, they're getting fatigue of the sponsors and they want those deals to be sold just because they want to get their money back or they've lost trust in their sponsors and they don't trust that the sponsor can operate the deal anymore or a number of other things, right? So as an owner operator, like it's creating an opportunity now for a lot of creative deal structuring, a lot of creative deal offers. And Tim and I, that's what we've been really highly focused on is really focused on doing those creative seller financing deals. I mean, most of the ones that we've been looking at lately are just ones that Tim and I want to do ourselves and not really bring on any other investors. But there's still a lot of opportunity out there for 100-unit apartment complexes that you can bring in on investors and make it a JV deal instead of a syndication because of the creative seller financing that you can achieve.
Yeah. Yeah. And man, you can't reiterate the, get involved as an LP enough. In fact, I was doing a little bit of that this morning. Tim and I were chatting back and forth about some stuff that I'm invested in. And guys, like it's important, right? Like you're invested. You've got to keep an eye on it. I think there's a certain level of set it and forget it. Otherwise, you're gonna drive yourself crazy. I tell people that with stocks all the time. Hey, if you're not a day trader,
Yeah.
buy it and let it run a little bit before you check in on it every day. That kind of thing. Kind of the same thing as an LP, but definitely check in. Because I can even tell you as an operator, one of the most frustrating things, and Tim, feel free to reach through the screen and smack me for saying this, but one of the most frustrating things to me is an investor that hasn't checked in 2 years. And then they show up with tons of questions. And it's like, Hey, happy to answer those questions. Happy to help. But a lot of this has been covered over the last 2 years.
Have you read the quarterly updates?
Yeah.
Why don't you
Yeah.
start there and then come let me know if you have any questions.
Again, happy to help, but
Yeah.
it starts to be concerning. It's like, hey, it's obvious that you haven't been looking at this, and that's a little concerning. Um,
Mhm. Yeah.
so but yeah, do yourself a favor, guys. Like, build a relationship with your syndicators, build a relationship with your deal sponsors and stuff like that. Even as an LP, don't look at it as set it and forget it. You treat it like anything else in your portfolio, right?
Mhm.
Um,
Yeah.
so
So, what are some other things that we're selling in the seeing in the sellers market? I haven't really seen a whole lot of price reductions, or
no,
some brokers call them price improvements. I think they're coming. Price improvement. That's my favorite. I think there are price improvements coming. I think with what I know about what's going to hit the market in the next 60 days, with how many deals are going to be hitting the market all at the same time, I think that there's going to have to be price reductions because people are just going to be offering 10, 20% below ask
yeah,
just because they want to, just because they want to get a good deal because there's so much opportunity out there, right? So how motivated are you as a seller is really going to depend on how low are you willing to go? How bad do you need to get out of this deal? And I mean, Tim, I just asked you yesterday. I was like, we own a lot of properties, and at what point do we say, hey, now's not the right time to sell. We're just going to refinance it again and sit on it. And I can't make that decision for every sponsor out there, but there are going to be a lot of people out there that are just like, I'm tired of the property management company. I'm tired of running the property management company. I'm tired of the insurance increases. I'm tired of
yeah,
just this morning we had a lawsuit that's been ongoing for 2.5 years now. Finally settle. Um, I mean, how much pain are you willing to go through? How much are you willing to kind of endure before you just like, this ain't for me anymore?
yeah.
Um, and dude, I think it's coming in droves over the next 24 months.
Yeah, 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 for sure. I mean, and you're seeing. I mean, that seems to be the buyer mentality for the most part. I mean,
Correct.
there's a sprinkling of guys out there who are just gobbling things up, but the rest of it seems to be, hey, I'm gonna throw 20 LOIs out because I'm fishing for that one guy who's exactly what you just said, who's
Yeah.
sick of being sued by tenants, sick of operating properties, who I don't know, who wanted to go away on a vacation and kept getting tenant calls while he was, walking around Paris or whatever. I don't know, but I think a lot of people get into this with the idea that you can own these things and then just go away and they operate themselves. And I think they're learning that's not the case. And then even
And there is a world where you can do that. It just depends
yeah,
on what role you fill in this
right.
world.
But even the best operators are starting to get fatigue. I mean, hell, Tim and I call each other all the time, and we're like, "Oh man, if I get one more quote like that on from
If
insurance, I'm gonna lose money."
2025 doesn't go out with a bang, I don't know what
Uh,
will.
just a little aside. What was it? Was it New Year's Eve?
No, no,
I think
no.
it
It
was.
was the 30th. You're like,
Yeah,
if 2025 didn't kick us in the face one more time, and I said, Tim, there's still tomorrow.
that's right. That's right. Yeah. So, buddy, like we're talking about that, guys. Like December 30th rolled around. It's like we got another kick, and it was like, oh, like you couldn't
Yeah,
just let me have the last 2 days of the year,
right.
Um, but guys, like seriously, like you're looking for that guy, right? You're
Yeah,
looking for that guy who's like, this year sucked, and I'm tired of it, right?
yeah.
Um, and who knows? Like, I mean,
You know what I think is you know what I think? I think it's the lone wolf that gets fatigue.
I
Like,
agree. I
right?
agree.
Like you and I share the load equally, and sometimes you more, sometimes me more. It
Right.
really just depends. And if you're the lone wolf doing this all yourself with no partner, no real
Yeah.
partners to help you out, you absolutely are going to burn out, right? It is exhausting dealing with everything all the time, right? Like, and there's sometimes where I'm just like, nope, I'm done. I'm walking away from this for the next couple of days and I'll be back.
Yeah.
And sometimes you just need that. And I do think that the people that can endure the pain are the ones that have the partners that they can lean on and rely on. And the ones that don't are going to burn out and fizzle. I mean, how many stories have you heard about entrepreneurs burning out and
Oh yeah.
fizzling because the stress is just too great, right? Like,
Yeah.
doesn't matter what the business is, doesn't matter if it's property management, real estate, HVAC, a service company, software, doesn't matter, right?
Yeah.
Eventually everybody cracks. And I think that the people that are successful are the ones that don't do it
Yeah.
themselves.
It's that's a really good point, Tim, because yeah, just to give you a little idea, like Tim handles a lot of our refinance and our insurance stuff. I handle more like the boots on the ground stuff, right? So, it's very different when he those are the two headaches he has to manage, right? And then
Hmm.
those headaches that I have to manage. So, I show up and a contractor is like, man, that damn guy told me he was going to be done 60 days ago and he's still in there installing flooring, and like that headache and fighting with those guys, that's different. And then Tim will call me and he'll be like, man, we've been working on this damn refi since July. Here we go again, all this other stuff. So being able to share those headaches, to Tim's point, it really helps. It really does. I can't imagine if I'm on site arguing with a contractor and I get called from the lending broker about my loan that I've been trying to get for 6 months. I can't imagine that I wouldn't lose my mind. I would absolutely flip. um,
Yeah.
yeah,
And it has to be a bit compartmentalized because
yeah,
changing gears all the time. Like, we just entered tax season, right? So a lot of my time and attention is going to be on these tax returns and getting the
yeah.
books reconciled this month and getting everything done and completed and trying to get we didn't change CPAs this year. So hopefully our K1s are going to be significantly tighter timeline because we don't have to go through that learning process all over again.
Hope.
But,
Yeah,
that is my goal for the next 90 days is to focus on that. Obviously we have 5 refinances going on as well. And there's a lot of other things, but it's like, you can't focus on the refinances, the taxes, the construction, the acquisitions, like everything all at once is just outrageous. And that's ultimately what causes people to crack and sell because they're just like, I'm just done with this. This is way harder than I thought it was going to be. And I'll say, life pro tip here is that everything generally is a whole lot harder than social media makes it out to be. Even if
yeah,
I mean, social media influencers, they get burned out because just being on all the time and dealing with things all the time gets exhausting. And their problems look different than my problems, but everyone has problems at the end of the day. And it's your job as a real estate investor to find opportunity and solve the problem of the person that's tired and burnt out.
yeah, yeah. And guys, I 100% agree with it. Tim, feel free to smack me, but Tim and I know some of the guys on social media, like we know them personally and stuff. And I'm not going to say names or anything, but I can promise you what you're seeing isn't their day to day reality.
No, right. No,
So
exactly. And
so
I mean, I've taken a huge step back from social media
yeah,
just mentally, it's been good. I'd like deleted the apps off my phone for over a year, and that was good. I probably will start getting back into posting and doing some social media things this year. But it was because we had other problems to fix that took
yeah,
priority over social media, right? And it's not to say that anybody that's posted on social media is a liar, but it can have rose colored glasses even when you're trying to make out the bad stuff. It still has a little bit of softening. It's got some sprinkles on top at the end of the day, right? It's not all doom and gloom. I mean, it can be, and lessons learned can be interesting and difficult, but at the end of the day, like, it's just finding opportunity and learning how to capitalize on that. So
yeah,
yeah, so for this year, I think we're just going to continue to focus on creative financing deals, creative seller structuring, trying to find opportunity where it serves us. And I'm not interested in volume. I'm interested in quality at this point. Whether we're selling some of our older stuff and kind of reorganizing it all into like newer product. I mean, that's a good place to be, or even just kind of centralizing it in a better location for operational efficiency. I mean, that's been a lot of the conversations that we've had lately. And just because we're selling doesn't mean that we're cracking, but we're also feeling some level of fatigue in certain markets because they're difficult to operate in. So yeah, I guess we actually kind of do fall into that seller fatigue bucket potentially. And I know you and I have had some conversations of like, oh, just get rid of this one. Just get rid of it. Like, and that comes down to that seller fatigue. And if somebody else is willing to take on that problem and that headache, they probably can make money on it. but where is the best time and best allocation of my time and attention? And it may or may not be on this deal, but it could be for somebody else.
Yeah, yeah. You know what's interesting is he was he we had a whole session earlier this year, and he was responding a lot. Mark Schuler, um,
Oh yeah.
was yeah, he had a really good post today. Speaking of social media, he had a really good post today where he was basically talking about not I'm gonna mess this up, but basically like not taking on deals that didn't meet his criteria, um, helped him take on deals that were more profitable for him. So basically, like not taking on deals that just basically took his time and energy to operate, really didn't make him anything.
Hmm.
Really helped him like stay the course for deals that made more sense for him, and eventually ended up being more profitable for him. And
Hmm.
guys, like that's what people mean. Like, don't miss a good deal because you went after a bad one, right?
Hmm.
And and so I think that's kind of what Tim's talking about here is like we're going to be really really focused on finding those good deals and not finding things that just like create time that are just time sucks.
Yeah.
um, because
And I don't think we'd be able to identify those properties unless we've gone through what we've gone through in the
agreed,
last 18 months.
agreed. And guys, like that doesn't mean that a deal that's a time suck for you isn't a good deal for someone else. I see that mistake all the time, right? When people are
Right.
like, why did you buy that? I looked at that and it was awful. Well, that person may have access to things or systems that you don't have, right? So they're able to do that and make it work. So don't assume just because it's not a good deal for you, it's a bad deal for someone else. And then same thing, don't assume that because it was a bad deal for one guy that it's not a good deal for you.
Hmm.
They're all unique in their own unique way.
Yeah.
Yeah.
Right. So,
So
all right, guys. Well, that's kind of what we're seeing and what we're expecting over the next 90 days. We're getting back into acquisition. I mean, I wouldn't say getting back into, but making a more aggressive offers in creative seller financing deals. Have taken a crack at a bunch of deals that are currently off market that will be on market here soon. Um, and time will tell. And basically, the conversation ended on my side of, hey, well, this offer is good until they feel like accepting it, type of thing. And I made the offer work where it's like, hey, even if they come back 6 months from now, I would still do that deal under this offer just because it works and it makes sense and it fits in my bucket or something like that. So, all right. That's all I got for this show. And we will be back next Tuesday at 10 a.m. And appreciate everybody joining and looking forward to a great year. Make it off. Hopefully, it starts out to a great year for you and that you take some of these lessons and apply some of the things that we're talking about, that we're seeing, and we're passing this knowledge along from other professionals in the space. So appreciate it. And we'll see you next week. Peace.
all right, see you guys.